Hi traders, welcome to the new weekly forecast for the trading week beginning on January 27th. And Trump era 2.0 has begun, and Trump is known for surprises. Now, in the past week, when Mr. Trump took the office as the new president of the US, we were expecting that he is gonna impose new tariffs. But surprisingly, he hasn't. And moreover, he has given a statement that he is looking to put a leash to US Federal Reserve, which means he is gonna keep a strict control on the monetary policies, and hoping that during his control, during his presidential era, we'll be expecting lower rate of interest, which should bring weakness in the dollar. Apart from that, in the coming week, we have three major central banks coming up with their new monetary policy. We have US Federal Reserve, we have Bank of Canada, and we have European Central Bank. So let's get to the charts and find the new tradable opportunities for the coming week. So let's begin our chart analysis, and as usual, we'll take it from dollar index. I would like to go to weekly chart for dollar index, and I'm going to remove all the existing drawings. Now, based on the weekly time frame, dollar index is definitely showing a bullish chart pattern. So this is the beginning of the new bullish wave. High created, then higher low created, and now it has created higher highs. Higher highs on histogram and higher highs on MACD lines too. Now it has reached an important level, the Fib level. So let's apply the Fib extension here. So Fib extension in the bullish direction applied, and it was supposed to reach to 111.30. That's Fib extension 1.618. It could not, it fell short, and I'm going to apply a bigger wave as well, bigger ABC. So based on the confluence of two Fib extensions, I'm still looking at the target of 114. Yes, so this is 114 I'm looking at. That's the long-term thing. I'm going to zoom in, and here, based on the closer look, we've got high and higher high, and I'm looking at the weakness on MACD histogram. The MACD lines are still rising. The convergence has started. Okay, so the blue line has started coming closer to the golden line, so which is a sign of weakness, but the pattern remains bullish. Now I'm Now I'm going to apply Fib retracement on the latest up move. So based on the Fib retracement, currently it has reached an important level of support. So this is the level of support. So we have highlighted with blue here. The next confluence of support is here. So the price level between 104.76 to 104.36. Now let's move to daily. Now based on daily time frame, we have higher high pattern with bearish divergence, and the BOS is also done. Now the sellers have done the first move downwards, and it has reached to an important level of support. The histogram is still showing bearish momentum, and MACD lines are also aligned in the bearish direction. Moving down to 4-hourly time frame now. I'm going to zoom out a bit, and we also get to see a wider bearish divergence here. And based on the wider bearish divergence, this is the next level I'm looking at, the level of BOS. So let's do one thing. Let's add a horizontal line as the BOS level based on the wider divergence. So this is our BOS level. Moving down to 4-hourly time frame. Now on 4-hourly time frame, the sellers are in control. They have created high, sequence of lower high, and lower high. Now, when we are in downward direction, we usually try to find weakness in the ongoing trend. And yes, based on the lower low pattern, this is the lower low pattern, and histogram has started forming potential bullish divergence, which means I'm looking for a pullback, and after the pullback, it should continue in the downward direction again. And it makes sense because on the basis of economic calendar, we have interest rate announcement lined up in the coming week. So there can be short-term pullback, and any pullback towards this falling trend line or the area of supply here and the next area of supply is here. So any pullback towards 108.5 or 109.5 to be taken as the short-term opportunity for selling. I can also apply fib retracement here and fib extension in the downward direction. So I'm using fib extension first in the bearish direction, and let me change the color to red since it's bearish. And I can also apply fib retracement starting from this high to the current low. Now there is a very high potential that during this pullback it can go back to 108.17 sorry, followed by 108.59, taking out this high or maybe this area, and it should start the next leg downwards. Short-term pullback and then continuation to the lower levels is highly anticipated. So what is the plan? So dollar index is expected to correct towards 104.23 and then resume its bullish journey. Now, since dollar index is getting weaker, so most of the major currency pairs, so currencies which are paired against US dollar are expected to rise. So let's see what's happening with GBPUSD. Now, starting from the weekly time frame, now here I want to zoom out, and based on the weekly time frame, this is a strong level of support. So we have seen big rally from this area, then the second push. So this is the first big rally, okay, taken from this level. The second one happened here, and the third one is here. Now it's back to the same level of support. Now I'm also going to apply fib extension here in the bullish direction. So here, this is the lowest point visible to me, and connecting to the high and higher low formed here. So right now, if I zoom in and I focus on this downward leg, I can see the signs of exhaustion in the sellers, and this is definitely a crucial support price, 1.2104. If I change the chart to a candles chart, look at the strong candle here, the strong weekly candle here. Okay, so this shows that buyers are back in the market. Now I'm moving to daily time frame, and here based on daily time frame, the bullish divergence is obvious, clear on histogram and on MACD line. So we have double bullish divergence. I'm going to use Fibonacci retracement from the highest to the current low, and we have just crossed Fib retracement 23.6. It is highly anticipated that GBPUSD bulls should take the price to 50%, that is 1.2791. Currently we are at 1.2482, so we have a very good potential to capture this up move. Now based on histogram and MACD lines, it's running bullish, clearly bullish at the moment. Now moving down to 4 hourly, and based on 4 hourly time frame, I'm going to use Fib extension starting from the lowest, so it becomes our point A, we have point B and point C. So A, B, C can be applied here on 4 hourly in the bullish direction. Using A, B, C and applying the fib extension. Let's use green color here for bullish fib extension. So right now we are at a very strong level of resistance, and the next magnet zone falls between this area, and the strongest magnet is coming at this area. So we have marked the potential barriers, resistance zones. Currently, histogram is rising and MACD lines are also bullish, clearly rising. So buyers are holding the market. Full control is with the buyers. I'm moving to the next lower time frame, that is 1H, and I get the opportunity to apply a rising trend line here. Now, if you see a pullback, if you get a pullback, right now there is no divergence. MACD histogram rising, MACD lines are clearly rising. If we get some pullback, it should be taken as an opportunity to buy. So most likely, if we see a pullback towards 0.618, in terms of price level, it could be 1.2286 or 1.2361. If we get just a shallow pullback, take it as an opportunity to buy and look for the targets I've already explained on the higher time frame. So we should look for 50% retracement area, and this could be 1.2482 followed by 1.2753. This is exactly, give me a second, 50% is coming exactly on 2791, and we also have a strong magnet area at 1.2952. So I'm confident that if we buy the dip, we can capitalize on the short-term bull run in GBPUSD. Coming down to 15 minutes, even on 15 minutes time frame, the pattern is extremely bullish. It's continuously creating high and higher highs and higher lows as well, and we have no signs against, no bearish momentum. So any pullback to be taken as an opportunity to go long in GBPUSD. Now, since dollar index is getting weaker, so USDCHF looks bearish to me. So the next instrument is US dollar versus Swiss franc. Now I'm on the weekly time frame at the moment, and based on weekly chart, if I zoom in, we are at a very strong resistance point. I'll be applying fib retracement from the highest to the lowest, and it's also falling in between 38% to 50% area. And let's apply another resistance band here at 50% precisely. Now, MACD histogram has started fading out, although there is no bearish divergence, and MACD lines have started curving down again. So not a clear sign, but definitely it looks exhausted at the moment. I'm moving down to daily now. Now, based on daily time frame, I'm gonna study the price pattern here. So we have higher highs, and this currency pair runs into the strong resistance band, and based on higher highs, I can see that we have continuing type bearish divergence, so which clearly shows that buyers are exhausted and sellers have created lower high and lower high. So it's time for some correction here. I'm going to apply fib extension in the bullish direction here, connecting from the lowest point to the first high and higher low, and it ran into fib extension 0.618, and the break above fib extension 0.618 turned to be a fake one, which means the buyers could not hold the level above 0.618. And currently, histogram is strongly bearish, MACD lines bearish, and I get to see a strong bearish divergence on histogram, the wider area. Now moving down to the next lower time frame, that is 4 hourly chart. On 4-hourly chart, it is continuously printing lower highs, and lower highs in conjunction with lower lows. I'm going to apply Fib extension in the downward direction. So based on Fib extension in the downward direction, let's find out the levels. Let it be red in color, and currently we are exactly on extension 100. It is highly expected that it will reach 161 or 200. So how do we trade this opportunity? Now in this case, if you want to take a sell trade at the current market price, let's assume, then my stop loss has to be higher than this level. So why I have considered this is A, B and C. So I'm going to protect my sell trade by keeping a stop loss higher than point C. And I'll be targeting 200 or 2.618. Now I want to see the risk and reward ratio. So risk reward ratio is just 1.19. That's not amazing. So I need to move down to the lower time frame to optimize the setup. Now when I move down to lower time frame, I get to see some more bearish waves here on the lower time frame. So I can apply next Fib extension in the downward direction by connecting to the next ABC. Now we may get some magnetic levels here on the confluence of multiple Fib lines. And yes, I get to see the next magnet zone, and I would like to bring down the stop loss to this level. So by minimizing the stop loss, by minimizing the risk, I have taken into account this level, which is again a result of confluence of two Fib lines. So I have reduced the stop loss to 87.2 and I'm targeting 172 pips here. So my risk reward gets optimized and we'll be getting around 1:2 risk and reward. So short term setup in USDCHF is bearish. Let's move down to 15 minutes. And on 15 minutes, the environment is still bearish. I can see the MACD histogram and MACD lines, they're still running bearish at the moment. The next currency pair is Euro versus GBP, Euro Pound. I'll go to the weekly frame and explain here. Let me zoom in. Now based on the weekly time frame, this is a super strong area of support. And we get to see bullish divergence here. So during its downward journey, it created lower lows with bullish divergence. And we get to see a sudden rise in Euro GBP. I'm gonna mark the important levels of resistance taking from the previous downward trend. So this is definitely a strong resistance. Then we have strong resistance here. And this is also a strong level here. Now based on weekly time frame, this is running bullish. The histogram is clearly rising, MACD lines are rising, and I'm going to apply Fibonacci retracement by connecting from the previous resistance to the current support. And it reaches precisely Fib retracement 61.8. Now let's move to the lower time frame, that's daily. Now on daily time frame, histogram has turned light green. It means the bullish momentum has lost. MACD lines have curved back again and they have started converging. So buyers are getting weaker. And based on daily time frame, we are also at a strong level of resistance. So this pullback is highly anticipated. Now move down to the next lower time frame, that is 4H. Now based on 4-hourly chart, I got to see higher highs crossing the strong area of resistance. So a fake high, fake breakout with bearish divergence on MACD lines and even on MACD histogram. And currently it has reached BUS and the bearish momentum is intact. So I'm gonna apply Fib extension on the first bullish ABC formed on 4-hourly chart. So let's use the lowest point first high and the next higher low. Change the color to green here, and it is highly anticipated that this retracement can go to the magnet zone, that is around this area, followed by fib extension 100, and it can even flow towards 0.618. So this is the downside I'm looking at. I want to capitalize on this temporary downward move. Moving down to the next lower time frame. I can also add fib retracement starting from the higher low to the current high. And it makes sense because now I'm looking at this area as the potential target. So the highlighted blue zone is the target zone for Euro Pound short-term sell plan. Moving down to 1 hourly. Now based on 1 hourly, it made equal highs with bearish divergence here, and the sellers have taken the control. Now I'm not going to sell at the current market price. I'll be waiting for the first temporary stoppage, first pause in the selling movement, okay, in the downward trend, maybe around this area. Then I'll wait for the pullback, and I'll be interested after the retracement. So I'll get into a sell trade after the pullback, and I'll be targeting this area. So in this case, I'll be optimizing my risk and reward. So let's do one thing. Let's apply short position risk and reward. So I'll be selling around 0.8431 or 30 with the stop loss higher than this double top, and my target is the highlighted blue zone. So in this case, by waiting, I'm going to optimize my risk and reward ratio, which becomes 2 now. So the short-term plan for Euro Pound is bearish. The longer term, based on weekly chart, still looks bullish to me. And finally, I'll be moving to gold. Monthly chart is bullish. I'm not going to add fib extensions. I've done it n number of times in my previous video. I'm just going to explain the pattern here. The trend looks bullish to me. There is a good gap between the two lines of MACD. Histogram is still bullish, so bullish on monthly time frame. Moving down to weekly now. Now, even on the weekly frame, I'm looking at this higher high pattern in conjunction with MACD lines. There was bearish divergence on histogram, which didn't work. And now gold is about to break above the previous high. It has just broken, and it has given a tiny close higher than the previous high. Now I'll be moving to daily frame, but I would like to apply fib extension on weekly first in the bullish direction. So I'll start from this low. I'll connect to the first high and higher low. So basically ABC pattern identified and fib extension applied, and this is the strong support zone. 2604 is the ultimate support, and the next resistance is fib extension 2.618. In terms of price levels, it is 2843. So 2843 is the next target, followed by 2990 coming from fib extension levels. Now I'm moving to daily. On the daily frame, buyers are in full control. MACD histogram rising, MACD lines are also rising, and there are no signs against. I'm gonna use the latest pattern to apply the next fib extension in the bullish direction. So I'll be using low as A, B, and point C. It should help me to get the magnet zones. So let's apply next fib extension. Now where do we see the magnet zones? The magnet zone is coming exactly on 3000, the psychological mark. So I believe that very soon gold is going to 284243, followed by 2903, followed by 3000, the psychological mark. Moving down to 4H, even on 4-hourly chart, I do not see any signs against. Yes, there is bearish divergence formed between the last two highs, which should give us the temporary pullback, required pullback, and it makes sense because temporarily in the short run, in the coming week, I'm looking at the bullish retracement of dollar index, so which should bring some short-term weakness in the gold, but the dip to be taken as an opportunity to go long, to buy. So I'll be using another fib extension here on the latest 4-hourly leg. Applied, done, connected with the higher low. I'm going to change the color to green, and the confluence of support is at 2687. So I believe until it holds above 2687, I'm also going to add a rising trend line here. So even if it breaches the rising trend line, because the trend line is getting quite steep here, this is the first area of support, which is falling between 2754 to 2735. If it gets breached, then I'm confident that it's going to hold at 2704 or 2683. So until it remains higher than 2683, I think you should take the opportunity to buy the dips. We can also use an alternative trend line here, which makes more sense, and we have another one here. So I have applied 3 different trend lines. So in case the first trend line gets breached during correction, I'm looking at the second trend line to hold, and that's coming exactly at 2683. Worst case scenario, I'm looking at 2654. But my plan is to buy the dips. I'm not interested in short selling gold. So this is the plan for upcoming week, and I hope my technical analysis adds value to your trading plan. Have a profitable trading week ahead. Take care. Bye-bye.